I'm going to do question number 1. 3 questions will be trying beautiful area. Everyone will be studying fully self-occupied, fully let out. Examiner will ask co-owned property. Are you all really with me? Two brothers, Arun and Bimal, are co-owners of a house property. Immediately, your brain should strike that. That is section 26. Section 26. Section 26 is the section which is talking about the co-owned property with equal share. That means 50% to Arun and 50% to Bimal. Are you all really with me? Property was constructed during the financial year 1718. In 1718 only, property has been constructed. Property consists of 8 identical units and is situated in Cochin. Cochin means Kerala. So it's an apartment. In apartment, 8 flats are there. Picture is the apartment. In apartment, 8 flats are there. During the financial year 25-26, our financial year, each co-owner occupied 1 unit for their residence. That means unit number 1, Arun is staying. Unit number 2, Bimal is staying. Still 6 units are there. Those 6 units are let out property. Are you all really with me? And the balance 6 units were let out at a rent of 12,000 rupees per month per unit. Super. The municipal value of the house property is 9 lakh. That house property means the entire apartment is 9 lakh. And the municipal taxes are 20% of the municipal value which were paid during the year. Since it has been paid, you can claim it as a deduction. The other expenses are repair, put it on dustbin. Insurance premium, put it on dustbin. Interest payable on loan taken for construction of the house, put it on pocket. Are you all really with me? Because these two are not allowable deduction. This is an allowable deduction, right? One of the let out unit, my dear, how many let out units are there? 6. In that one kada they are saying, remained vacant for 4 months during the year. That means it is a situation of let out property with vacancy. Super. Arun could not occupy his house for 6 months as he was transferred to Chennai. That means for 6 months period, it was locked. No problem, because still it will be treated as self-occupied property. You can have 2 houses for an individual. Am I right? So when I'm staying in the other house, this house may be locked. It is allowed. There is no need that entire 365 days you should be inside the house itself under the Income Tax Act. You can go out. You can go for your job. You can travel. He does not own any other house. No problem at all. The other income of Mr. Arun and Bimal. Other income means it may be salary. It may be PGBP. It may be capital gain. It may be IFOS. They themselves calculated and given to us. Our Arun are 2,90,000. Bimal are 1,80,000 for the financial year 25-26. Required. Compute the income under the head. Income from house property and the total income of 2 brothers for assessment year 26-27. If they pay tax under the default tax regime. That means if they are traveling through the default tax regime, there is no question of self-occupied property at all. Also show the computation of income under this head if they both exercise the option of shifting out of the default tax regime provided under 115 BAC subsection 1A. That means always I will try to do the optional tax regime first. Then it is very easy. Once I cut the self-occupied property, I will get the answer of the default tax regime. Am I right? I will be solving this question. Help me, my dear lovable students. Then we will check how the answer is proceeding. When I am doing the question, you also proceed along with me. Tell me how many units are there total? 8 units. For that self-occupied property number 1, self-occupied property number 2, let out property 6. Am I right? Because soap na tani-taniya podano, lope onna podano. Are you all ready with me? This I can give the data for total for the apartment as a whole. What are the data available in the question? You tell me, sir. Proportion we can take. Always the proportion will be 100%. Yes, sir. In that, this is 1 by 8, this is 1 by 8, and this is 6 by 8. That means out of 8 units, 1 unit is self-occupied property, 1 unit is self-occupied property, 2 units are self-occupied property, 8 minus 2, 6 units are let out property. Am I right? That's what the first information. Sir, it is monthly rent of how much rupees per month? 12,000 per month. So rent is, my dear lovable students, 12,000 into 12 comes to how much? 1,44,000 into 6, because there are 6 units are there, comes to 8,64,000. This is the rent we are supposed to get if there is no vacancy. Am I right? Are you all really with me? But my dear lovable students, one of the let out properties vacant for how much month? That means out of this 8,64,000, there is a vacancy rent of 12,000 into 4. 48,000. That means this 48,000 we would not received. Am I right? So 8,64,000 minus 48,000 comes to 8,16,000. Let me write it properly. 8,16,000 is the actual rent received. Am I right? Nothing to be given to SOP1 and SOP2. Entire 8,16,000 will go and sit with the let out property 6 items. Are you all really with me? I'm continuing with the question. Sir, question saying that municipal value is how much lakh? 9 lakh. So municipal value total is equal to 9 lakhs. Sir, calculator. 9 lakh into 1 by 8 comes to 1,12,500 is the municipal value attributable to first self-occupied property. Am I right, sir? Then again, 1,12,500 is the municipal value attributable to second self-occupied property. Am I right, sir? 9 lakh into 6 by 8 comes to 6,75,000 is the total municipal value attributable to the let out portion. Can I proceed? I'm moving to the next information. What is given? Municipal taxes 20% of the what value? So municipal taxes at the rate of 20% of municipal value. So 9 lakh into 20% comes to 1,80,000. Am I right? Divided by 8. 1,80,000 divided by 8. 22,500 is the municipal tax attributable to one property. Am I right? Again, 22,500 is a municipal tax attributable to one property. Am I right? So 1,80,000 into 6 by 8 comes to 1,35,000 is the total municipal tax attributable to the 6 let out property. Am I right, sir? Sir, what is the next information given in the question? IOBC has been given. My dear lovable students, the total IOBC for the apartment as a whole is 3 lakh. 3 lakh divided by 8 comes to 37,500 is the IOBC attributable to the first self-occupied property. Am I right, sir? 37,500 is the IOBC attributable to the second property. Am I right, sir? So 3 lakh into 6 by 8 comes to 2,25,000 is the IOBC attributable to the let out portions. Am I right, sir? I don't think that any other information is there to bifurcate. I hope that I have taken everything. Am I right, sir? So, sir, I can start doing the income from house property under the optional tax regime. This is for SOP number 1. This is for SOP number 2. This is for LOP number 6. Am I right? So we will be having gross annual value less local tax or municipal tax paid by the owner. You will get the answer as net annual value less deduction under 24A 30%. Less deduction under 24B IOBC. You will get the answer as income from house property. Can I proceed? With regard to the first property, GAV nil, LT bar MT nil, NAV nil, 30% nil. Dash, 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 dash. If you are traveling through the optional tax regime, you have to check that whether 3 conditions has been satisfied or not. My dear lovable students, whether loan has been taken on or after 1/4/1999? Yes, sir. Whether the loan amount has been used for the purpose of construction or acquisition of the property? Whether such construction or acquisition has been completed within a period of 5 years from the end of the financial year in which the loan has been sanctioned? Then higher limit of 2 lakhs can be claimed, but the interest attributable to the self-occupied property is only 37,500. Happily, I can claim 37,500 and 37,500. Are you all really with me? So it will land up in a loss of 37,500 for house number 1 and 37,500 for house number 2. Am I right, sir? My dear lovable students, with regard to let out property, actually for let out property, GAV is 3-step approach. Fair rent or municipal value, whichever is higher. Whichever is higher or standard rent, whichever is lower, that answer is called as expected rent. Dot. No information regarding the fair rent and all given in the question. No information regarding the standard rent has been given in the. So municipal value will be treated as expected rent. So the expected rent from the whole 6 flat throughout the year is 6,75,000. Are you all really with me? But I am so smart in the sense means by giving the 5 flat for entire 12 months and for the remaining 1 flat for 8 months itself, I have earned a rent of 8,16,000. That means my actual rent is more than the expected rent. So even though I am having vacancy, no need to check the genuinity of the vacancy. Am I right, sir? That means I can straight away declare 8,16,000 as the GAV of the let out property. Pakka. Less LT bar MT paid by the owner. Local tax or municipal tax attributable to the let out property is 1,35,000. Am I right, sir? Yes, sir. So 8,16,000 minus, sir, 1,35,000 comes to 6,81,000 is the net annual value. On that 30%, 2,04,300 is the, 30%. What is the IOBC attributable to the let out portion? 2,25,000. Am I right, sir? So from 6,81,000, if you reduce 2,04,300 and if you reduce 2,25,000, you will be getting 2,51,700. Am I right, sir? My dear lovable students, there are 2 brothers are there. Number 1, Arun. Number 2, Bimal. Am I right, sir? Sir, they are having income from self-occupied property. From the soap, 37,500. 37,500 are the loss. Number 2, from the lope, total 2,51,700. What is the share? 50%. So 1,25,850. So 1,25,850 is the share of income from let out property. Soap தனித்தனியா போட்டுட்டேன், lope ஒண்ணா போட்டு split பண்ணிட்டேன். Are you all really with me? Then they are having other income which is straight away given in the, for the Arun, 2,90,000 rupees is the other income, and for Bimal 1,80,000 rupees is the other income. Am I right, sir? So my dear lovable students, sir, can I knock off, sir, loss from self-occupied property against income from house property? Yes, sir. Because within the same head, you can do set off and carry forward. Those are set off, carry forward rules. Don't worry, we will be knock off in the appropriate time. Are you all really with me? So 1,25,850 minus 37,500 means 88,350 is the net income from house property. Am I right, sir? Plus the other income of Arun is 2,90,000. So the total income of Arun is 3,78,000. But the total income of this guy will not be the same because house property only same, other income differ. So 88,350 plus 1,80,000 comes to 2,68,350 is the total income of Bimal. Can we, sir, come and see where we are? Look at here, man. Sir, the first we have solved as per the optional tax regime. 3,78,350, 3,78,350, 2,68,350, 2,68,350. This is the answer as per the optional tax regime. The same thing only they have also done. If Arun and Bimal have excised the option of shifting out of the default tax regime, that means if they are going to travel through the optional tax regime, rent received is actually, what is the monthly rent? 12,000. For one flat, have they let out for 12 months? Yes, sir. Sir, into how many let out flats are there? 6 flats. If you multiply all, you will get the total rent receivable. Out of that, sir, one flat for 4 months, it was vacant. So 12,000 into 4, 8,16,000 is the actual rent received. Are you able to appreciate this? Municipal value attributable to let out portion, nothing. Sir, out of 8 house, 6 house are let out portion. That means 75% of the apartment are let out and 2 flat. That means 25% are self-occupied. Am I right? So 9 lakh into 75% means 6,75,000 is the municipal value attributable to let out portion. Am I right? My dear lovable students, GAV means expected rent or actual rent received or receivable, whichever is higher. Our expected rent is 6,75,000. Am I right, sir? Or 8,16,000, whichever is higher, means 8,16,000. Then municipal tax, LT bar MT paid by the owner. Sir, 9 lakh rupees is the total municipal value. On that, we are liable to pay municipal tax of 20%. In that, 75% is the municipal tax attributable to the let out portion. Easy? You will be getting 1,35,000. Sir, for every data, they are doing what is the amount apportionable. But in our master table, sir, we have put one table and we have find out all the data for the self-occupied and the let out. Are you already with me? The net annual value is 6,81,000. Comfortable. Less deduction under 24A. 30% of net annual value. 6,81,000 into 30%. 2,04,300 we got. IOBC total interest is 3 lakh. On that 75% attributable to the let out portion. So 2,25,000 rupees is the attributable IOBC. Accepting. So the income from the let out property is 2,51,700. This has to be apportioned between the Arun and Bimal in equal ratio of 50-50. So 1,25,850 is the share of income from let out property to Arun. 1,25,850 is the share of profit attributable to Bimal. Are you able to travel along with me? Whereas with regard to soap, onna podviya, tani-taniya podviya. We have to do it separately, Arun and Bimal. Are you all really with me? So annual value, we know nil. Sir, no need to start from gross annual value. Less LT bar MT paid by the owner. For a self-occupied property, always you can start with the net annual value. Am I right, sir? And there is no question of 30% at all. Only question of 24B, that is IOBC. That too, if you are traveling through the optional tax regime. Paka. So 3 lakh is the total interest you have paid. Out of that, 25% is a share attributable to the self-occupied portion. How that 25% have you understood? There are 2 properties are there out of 8 properties. Sir, 2 out of 8 means 25%. That means 75,000 is the total interest for the self-occupied portion. In that, there are 2 parties are there. Divided by 2 means 37,500 and that means income from self-occupied property is 37,500 and 35,500 loss. Since all the 3 condition has been satisfied, only 37,500 and 37,500. Getting it? So computation of income from house property. Sir, income from let out property, they are having income. Income from self-occupied property, they are having loss. You can do intra-head adjustment. Intra-head adjustment means ullukulla. So my dear lovable students, the income from house property amounts to 88,350 and 88,350. That I have written as taxable income from house property 88,350 and 88,350. Other income which is already given in the question of 2,90,000 and 1,80,000, we will end up with 3,78,350 and 2,68,350. Very comfortable. If this is a default tax regime, nothing man, there is no concept of what at all? Self-occupied property at all. That means the income from house property will only be the let out portion. Am I right, sir? My dear lovable students, the let out portion is 1,25,850. So here 1,25,850 and 1,25,850. Other income, my dear lovable students, already given in the which is 2,90,000 and 1,80,000. That means 1,25,850 plus 2,90,000 means 4,15,850 is the total income of Arun if that guy is traveling through the default tax regime. Clarity. And 1,25,850 plus 1,80,000 comes to 3,05,850 is the total income of Bimal if that guy is traveling through the default tax regime. Come on man, sir. If Arun and Bimal pay tax under the default tax regime, computation of total income is the question. For self-occupied property, which is 25%, annual value will be nil. Whatever may be the root, annual value will be nil. Sir, let's deduction under 24B is also nil because 24B can be claimed only under the optional tax regime, cannot be claimed under the loss from self-occupied property will be nil. That means under the default tax regime, there is no concept of self-occupied property at all. Now, with regard to the let out portion 75%, we already worked out 1,25,850 and 1,25,850. So the net income from house property under the default tax regime will be 1,25,850 and 1,25,850. Other income has already been given in the, which is 2,90,000 and 1,80,000. So the total income will be 4,15,850 and 3,05,850. Are you feeling comfortable with the co-owned property? Sir, computation of income from let out portion. For that 75% they have written how they have calculated. Sir, gross annual value we have already done. Municipal value is 6,75,000. Am I right? This is the municipal value attributable to the let out portion. My dear lovable students, actual rent received, whichever is higher, actually for the 6th flat, after vacancy, you got a rent of 8,16,000. Am I right? Less LT bar MT, which is nothing but out of the total local tax or municipal tax, 75% attributable to the let out portion. So 1,35,000. Net annual value is 6,81,000. We have separately calculated, man. Sir, actually the same calculation they have copy pasted again. We calculated above. Am I right? Sir, on that 30%, you will be getting 2,04,300, man. And we are having IOBC 2,25,000, man. You will be getting, sir, income from let out property, which is 2,51,000. This has to be apportioned between Arun and Bimal at 50% ratio, 1,25,850. The same table we have calculated above. Sir, since this is different route, they have repeated. In exam, no need to even repeat that because it will consume so much of time to solve under both the route. Am I right? One working note you write, always try to do the optional tax regime first, then adjust the here and there tinkering for the purpose of the default tax regime. My question to you, are you comfortable with the deemed honor? Because from the house property, this is an expected area for examination. Every student will be preparing fully self-occupied, fully let out property with vacancy, partly self-occupied, partly let out, portion self-occupied, portion let out, and deemed to be let out property. For you, we are going to do question number 2. Are you comfortable with question number 1? Mr. Raman is a co-owner of a house property along with his brother, holding equal share in the property. That means 50-50 is the share. Am I right, sir? My dear lovable students, municipal value of the property is 1,60,000. Municipal value of the property is 1,60,000. And fair rent is 1,50,000. Standard rent under the Rent Control Act is 1,70,000. Fourth information is very important. Rent received. That means the property is a let out property. Unna potu renda pidi. Are you all ready with me? Which comes to 15,000. The loan for the construction of this property is jointly taken and interest charged by the bank is 25,000, out of which 21,000 has been paid. That means out of 25,000 IOBC, only 21,000 has been paid, 4,000 has not been paid. That means IOBC is an accrual system. Even if you have not paid this 4,000, you can claim it this as a deduction. Am I right? Because LT bar MT paid by the owner. That is cash system. Whereas, my dear lovable students, IOBC is an accrual system. Interest on the unpaid interest is 450. Oh, since you have not paid this 4,000 to the bank on time, bank charged interest on interest. That is what? 450. Sir, interest on interest means penalty. Under IOBC, penalty cannot be claimed as a deduction. Only interest can be claimed as a deduction. That's what they are checking, whether you are knowing or not. To repay this loan, then this assessee is feeling that, since I have not paid 4,000 rupees, that guy is charging interest on interest. To repay this loan, Raman and his brother have a fresh loan, and interest charged on that loan is how much? 5,000. So 25,000 is the interest on the old loan and 5,000 is the interest on the new loan. IOBC does not have any clarification or classification of old loan versus new loan. Am I right? So, my dear lovable students, total 30,000 rupees interest. You can claim it as deduction under what BC? But this 450 can never be claimed as deduction under IOBC. Municipal taxes of 5,100 have been paid by the tenant owed. You are not entitled to claim the deduction because LT bar MT paid by the owner. Compute the income from this property chargeable in the hands of Mr. Raman for the assessment year 26-27 is the question. My dear lovable students, a solid, valid 5-mark question for examination. You tell me, is the property a self-occupied property or let-out property? If it's a let-out property, please do it as one property, right? Gross annual value will be there. Less LT bar MT paid by the owner will be there. You will be getting the answer as net annual value. From that, reduce 30%, reduce IOBC. You will get the answer as income from house property. Am I right, sir? My dear lovable students, gross annual value is a 3-step approach. Fair rent or municipal value, whichever is higher. So 1,60,000 is whichever is higher. Or standard rent, whichever is lower. Still 1,60,000 will win. Monthly rent is 15,000. So 15,000 into 12 comes to 1,80,000. So 1,60,000 or 1,80,000, whichever is higher comes to 1,80,000. Am I right? Less LT bar MT paid by the owner. Sir, LT bar MT has not been paid by the owner. Hence, it cannot be claimed as a. So the net annual value is 1 lakh and on that 1,80,000, if you claim 30%, 54,000 will be the deduction. Am I right? On IOBC, on the old loan, you are entitled to claim 25,000. And on the new loan, you are entitled to claim 5,000. So 30,000 rupees is the total IOBC. And you are not entitled to claim interest on interest because that interest on interest is a penalty. Am I right, sir? So 1,80,000 minus 54,000 minus 30,000 comes to 96,000 is the income from. This has to be bifurcated between Raman and Raman's brother. Are you all really with me? At how much percent each? 50% each. You tell me 96,000 into 50% comes to 48,000 is the total share of income from let out property for Raman. I am not bothered about the brother because question asked only about the what? Raman. Compute the income from house property in the hands of Raman. Nothing big rocket science. Remaining 48,000 will be taxable in the hands of Raman's brother. Are you all really with me? Sir, look at it, man. Computation of income from house property of Mr. Raman for assessment year 26-27. GAV. My dear lovable students, look. We got GAV of 1,80,000. Am I right? For every item, they have done 50%. That means 1,80,000 half, 90,000. Less LT bar MT paid. Since it is paid by the tenant, no deduction will be allowed. So the net annual value will be 90,000. Nothing. Our net annual value 1,80,000. What is a half? 90,000. Less deduction under 24A, which is we got 54,000. The half of 54,000 is 27,000. IOBC total, my dear lovable students, sir, we are having a total of 30,000. It should be 15,000 total. That's what 12,500 plus 2,500. Total comes to 15,000. Sir, we will be getting IFHP of 48,000. Raman share is 48,000. What we have done, one short answer splitting into two. That will be better for you. Otherwise, every data, if you are going to make it to 50%, I can bet you at least one data you will miss. That's it. Game over. Answer will be Swaha. So, if it is a let out property, my dear lovable students, do the answer as if it is owned by one single assessee, and then finally you have to bifurcate it. So, interest on housing loan is allowable as deduction under 24. On what basis? Further, interest on fresh loan taken to repay old loan is also allowable as a deduction under IOBC. We don't have a classification of old loan versus new loan. Am I right, sir? However, interest on unpaid interest is not allowable as deduction under section 24. Am I right, sir? Section 26, what is Section 26? Co-owned property. Provides that where house property is owned by two or more person whose share are definite and ascertainable, the share of each such person in the house property as computed in accordance with section 22 to 25 shall be included in the respective total income. Am I right? That means if a property is co-owned, we have to calculate the income from house property, and that income from house property should be included in the income of the respective assessee. Therefore, 50% of the total income from house property is taxable in the hands of Raman, since he is equal owner of the property. Able to appreciate? How you have calculated the GAV? Nothing, man. What is the municipal value? 1,60,000. What is fair rent? Fair rent or municipal value, whichever is higher, 1,60,000. Or standard rent, 1,70,000. Expected rent means, sir, whichever is lower, comes to 1 lakh. But the actual rent is 15,000 into 12, 1,80,000. So the gross annual value is 1,80,000. Able to appreciate? I'm moving to the last question from this slot. Again, I'm repeating, co-owner is an expected area for examination. Are you all really with me? Miss Abarna co-owns a residential house property in Calcutta along with her sister, Miss Dimple, with her sister's family resides. So there are two people are there. Number one, Aparna, sir, and Miss Dimple. Both of them have equal share in the property. That means both are having 50-50%. Am I right, sir? And the same is used by them for what occupation? Self-occupation. This is a self-occupied property. That means this is soap. Soap onna podviya? No, sir. 4 பேர் பார்த்துருவாங்க. தனித்தனியாக தான் போடும். Interest is payable in respect of loan of rupees 50 lakh at the rate of 10% taken on 1/4/2024 for acquisition of such property. You can claim up to a maximum of 2 lakhs. That means the total interest paid would have been 50 lakh into 10% comes to 5 lakhs. This has to be bifurcated between 2 lakh and 2 lakh. 2,50,000 and 2,50,000, but it should be restricted to how much lakh? 2 lakh. This is self-occupied property, kanna. அப்படியே டிவைட் பண்ணிட்டு போவையா திருப்பி அமைச்சிருவாங்க வா. In addition, Miss Abarna owns a flat in Pune. Already she is having a self-occupied property. One more property she is having. Allowed Abarna because 2 properties are allowed in which she and her parents reside. She and her parents. Mrs. Missa? Miss. Okay, right, sir. So she has taken a loan of 3 lakh at the rate of 12% on 1/10/2024 for repair of this property. That means even that property is also a self-occupied property. Yeah? But that loan has been taken for repairs. That means 30 lakh into 12%. Sorry, 3 lakhs into 12% into, sir, on 10th month they have taken a. Sir, 10th month they have taken a 1/10/2025. Then only it will fall in our financial year. Am I right, sir? So, my dear lovable students, sir, 10, 11, 12, 1, 2, 3. How much month? So, 6/12. So, what is the interest attributable? How much? 18,000. Sir, already in the first house property itself, it is 2,50,000. Angave gap filled. Now, again 18,000. Now, you are not entitled to claim that much deduction because under 24B, the maximum deduction you can claim is. So compute the deduction which would be available to Miss Abarna, Miss Pimble under 24B for the assessment year 26-27. If both exercise the option of shifting out of the default tax regime. That is very important. If this line is not there, question is useless. Because if these two guys decided to travel through the default tax regime, there is no question of 24B at all. Am I right? Provided under 115 BAC. So can we calculate? Computation of deduction under 24B available to Miss Abarna first. First one, man. Sir, interest on loan taken for acquisition of the residential house property in Calcutta. How much loan they have taken? 50 lakhs. What is the rate? 10%. For the total 5 lakhs. Am I right? Sir, Mr. Abarna's share out of that 5 lakh is 2,50,000. But it will be restricted to 2 lakh. This Abarna is having one more house property. That property is situated in Pune. The loan has been taken for repair. Am I right? My dear lovable students, for that, Question put only 3 lakh into 12%. That means the year is 24 only. That means last year itself loan has been taken 24, 25. That means last year it is 6 months. For our current year 25, 26, entire 12 months will be counted. Are you all ready with me? Sir, please process it. Sir, on 1/10/2024 means 24-25 loan has been taken. What is our financial year? 25-26. Hence, for the last year 6 months computation will come. For our year, entire 12 months computation will come. That's what 3 lakhs into 12% comes to 36,000. First of all, that will be restricted to 30,000 because maximum limit of 30,000 or 2 lakh as there. That's what outer column 30,000. So total to total, mela oru 2 lakh, keela oru 30,000, total comes to 2 lakh 30,000. That will be restricted to 2 lakh because under 24B, maximum IOBC allowed will be 2 lakhs. Are you all really with me? That means the balance here, actually 150,000 rupees extra is there. Yes, sir. Because out of 2,50,000 rupees share, you have claimed only what? 2 lakh. And here, entire 36,000 rupees, you have not claimed anything at all. That means 86,000 rupees, you can't do anything. You have to put it on dustbin. Like that, you should not think. You can claim it as a deduction, but not under section 24B. But there are sections under 80 EEA, 80 EEB, under chapter 6A deduction. This extra interest we can claim there. That I'll be teach you at the appropriate time. We are having a specific chapter called as chapter 6A deduction. Because once you calculate after you calculate the gross total income, we have to claim the chapter 6A deduction. Like we are having 80C, 80 CCC, 80 CCD subsection 1, 80 CCD subsection 1B, 80 CCD subsection 2, 80 CCE, 80 CCH subsection 1, 80 CCH subsection 2. Like that, still 30 more sections will run from the chapter 6A deduction. Let it be there. So there are two sections called as 80 EEA and 80 EEB, which we'll be learning at the appropriate time. There, this extra interest can be claimed up to a certain limit. There too, you have to satisfy 1008 conditions. Are you all really with me? I will teach you at the appropriate time. Come on, come to Pimble. Computation of deduction under 24B available to Dimble for assessment year 26-27. Sir, she has taken a loan of again the same 50 lakh. On that also 10% is the share. That means 50 lakh into 10% comes to 5 lakh. In that Dimble share is, sir, 2,50,000. Am I right? Sir, that will be restricted to 2 lakh, my dear lovable students. So deduction under 24B will be 2 lakh for Dimble, and Dimble does not have any other property. So there is no restriction at all. That's it with regard to the topic of co-owned property. I just want to come back and read this 2 line because now this will be having a lot of sense. Property may be self-occupied property, let out property. The annual value of the property, in case the property is a self-occupied property, annual value of the each co-owner will be nil. Kandipa, the net annual value will be nil. Am I right? And each co-owner shall be entitled to a deduction of separate 30,000 or 2 lakh as the case may be on account of interest on borrowed capital. So my dear lovable students, if it is SOAP, particulars, SOAP 1, SOAP 2, in that 24B IOBC, you can claim separate 30,000 rupees or 2 lakh as the case may be. Separate 30,000 rupees or 2 lakh as the case may be. Comfortable? Whereas if it is a let out property, income from such property shall be computed as if property is owned by one owner, and thereafter the income so computed shall be appointed against each co-owner at their respective share is what the discussion. That's it with regard to section 26, that is what owned property. Sir, we are having a section called as section 25A, which is talking about unrealized rent and arrears of rent. We have already talked about rule 4, tenancy should be bona fide. The defaulting tenant should vacate the property, and defaulting tenant should not occupy any other house property of the assessee. legal proceeding should be initiated, or you should, sir, inform to the assessing officer that whatever legal proceedings initiated should be useless. Are you all really with me? But my dear lovable students, after certain point of time, that tenant is coming and saying that, sir, actually we have stayed in your house for 6 months. We were not able to pay the rent. Edukku, sir? At that time, we were not even able to eat food. At that time, there is no question of paying rent. But now, my son or daughter has become chartered accountant. He or she has been well placed, earning in lakhs. We are having well settled, sufficient money is available with us. So please keep this, sir, rent, sir. Please keep this unrealized rent. Let it be now a realized rent. Are you all really with me? Or you said that, my dear lovable students, because my son or daughter is studying CA and we are very, very financially backward. Very, very financially backward. My dear lovable students, if the same property has been given to some other person, per month you would have got 8,000. But since because of your karuna, because of your kindness, you gave the same property at 5,000. So because of us, you were endured with a loss of 3,000 per month. So keep it 3,000 into 12 into how many years we have stayed, 3 years, 4 years, 5 years. That extra amount, 1,50,000. Because of us, no one, sir, should have the loss. Arrears of rent I am giving. That means old rent I am giving now. Sir, I am studying in college. I am having paper arrear. I am clearing now. The same way, old rent which I am supposed to get, I am getting. What Income Tax Act is saying that whether it is unrealized rent or whether it is arrears of rent, if you get in future, the section will be 25A. 25A have to say something to us. New section 25A, the amount of rent received in what? Arrears from a tenant, or amount of unrealized rent realized subsequently from a tenant by an assessee shall be deemed to be the income under the head house property in the financial year in which such rent is received or realized, and shall be included in the total income of assessee under the head income from house property. Nothing. On time, if the tenant have gave you rent, under which head of income you would have taxed it? IFHP. So in future, if you are getting unrealized rent, in future, if you are getting arrears of rent, even that time also the income will be taxable under the head IFHP. There is no doubt about it. Are you all really with me? The twist is, my dear lovable students, in order to tax an income under the head income from salary, as per section 15, as per section, there should be employer-employee relationship. There should be employer-employee. Then only the income will be taxable under the head income from salary. As per section 22, sir, in order to tax an income under the head income from house property, there should be a house property and you should be the owner of the house property. You should be the... Sir, if I am not at all the owner of house property, how the rental income will be taxable under IFHP? Am I right? My dear lovable students, these two sections you please remember. Section 15 is the charging section of the salary. Section 22 is the charging section of the house property. Can I proceed? My dear lovable students, actually I have let out the property 3 years back. At that time, that particular guy has not paid rent. That is called as unrealized rent. I was not able to realize the rent. Or there were arrears of rent also, right? After 3 years, that guy is coming to me and saying that, we are very sorry, sir. We were not intentionally done that. At that time, our financial position was very weak. Right? My son or daughter was studying CA. Now he become a chartered accountant. We are having lot of money. Please keep 1,50,000 rupees with you. This is for the pending balances what we are supposed to be paid to you. Clarity? My dear lovable students, at that time, this owner is saying that, Appa, now I have sold that house property itself. Because how many years over? 3 years over. My daughter, sir, or my son were need of some fund. For that we have sold the house property. Then as per section 22, income will be taxable under the head. Income from house property only if you are the owner. Hello, sir. Are you owner now? But still you are getting unrealized rent or arrears of rent. This should be taxable under NOS. Like this, you should not think. What Income Tax Act is saying that whether the assessee is owner of the property or not in that financial year. Because the logic of the Income Tax Act is this income accrued or arisen in this year but received in this year. Are you all really with me? That is not taxed in that year because, my dear lovable students, it has not been received. Hello? It was a dash realized rent. This was a dash realized rent. Arrears of rent. Are you all really with me? So, this income has been actually accrued or arisen in that particular financial year itself. In that particular financial year, you are the owner of the house property. Am I right? So, we are not violating the condition of section 22. We are following section 22. Only the taxability has been deferred for a future year. Are you all really with me? That's why this section is saying that, sir, in future, if you are getting unrealized rent or arrears of rent, my dear lovable students, that will be taxable in the year of actual receipt, whether or not you are the owner of the property. Can I proceed? So, this is the finalization. New section 25A subsection 2. So, this is 25A subsection 1. This is 25A subsection 2. Sir, if this income has been taxed earlier, you would have claimed a standard deduction of 30% under 24A. This is the first time you are going to tax it under income from what property? House property. So, now when you are taxing against that arrears of rent, against that unrealized rent, now you can claim how much percent? But that 30% is not as per 24A. That 30% as per 25A. Are you understanding difference? Original taxability 30% 24A. But sir, deferment taxability 30% 25A. Or unrealized rent received subsequently by the assessee. One line summary of the entire discussion is, it will be taxable in the year of what or what? Received or realization. And in the year of taxability, deduction at the rate of 30% of the rent received or realized, right? So it is taxable even if the assessee is not the owner of the property in the financial year in the receipt or realization. Clarity. We'll be doing one question from this area. Question number 1, very small question only. And question number 2, another very small question, my dear lovable students. Here we will be pausing for the discussion further. Come on, sir. Question number 1. Mr. Ladin has received a sum of 15,000 representing unrealized rent from a defaulting tenant during July 2025 out of 25,000 due from him. This I am making to 25 just to fall in our financial year. My dear lovable students, who's the assessee? Ladin. Ladin has received 15,000. Ladin has received? Yes, sir. So, Ladin has received 15,000 from a tenant. Am I right? From that tenant, actually, 25,000 is supposed to get. In this 25,000, only 15,000 Ladin has received. But still, how much to be received? 10,000. The 10,000 has not been received now. Mr. Ladin has claimed the unrealized rent of 25,000 for assessment year 1920, which the AO fully allowed as deduction under section 24. In the sense means, Ladin said that, sir, this 25,000 I have not received, sir. My dear lovable students, this 25,000 has not been received means this is unrealized rent. Rule 4 condition has been satisfied. So when I am calculating the actual rent received, I would have reduced the what realized rent. Since rule 4 condition has been, after whatever balance amount you are getting, for that only I would have paid tax. Now I am getting this 15,000. This has not been taxed earlier. Am I right, sir? Incidentally, Mr. Ladin had sold his property during March 2024, 25, whatever it may be. That means by the time when he received the unrealized rent, he is not the owner of the property. Still no problem. As per section 25A, if an assessee has received unrealized rent or assessee has received arrears of rent, it will be taxable in the year of receipt, even though they are not the owner of the property. Can I proceed? Advise him about the chargeability of the amount 15,000 realized from the default tenant. That 15,000 will be taxable, my dear lovable students, after claiming deduction of 30% under 25A. So 15,000 into 30% comes to 4,500. So 10,500 will be taxable under the head income from house property. Clarity. What will be your answer if A was allowed only what? 20,000 as deduction instead of 25,000. Assessing officer is saying that 25,000 will not be treated as unrealized rent. Out of this 25,000, 5,000 you already received. For that you already pay tax now. Hello, sir. Whereas, my dear lovable students, only 20,000 has been treated as unrealized rent. This is a beautiful scenario. Just be with me and get the concept of first number one. Sir, first how much is the IFHP? What is the unrealized rent received? 15,000. Am I right, sir? My dear lovable students, unrealized rent for which no deduction has been allowed, but deduction has been claimed how much? 25,000, right? In second case, man, deduction allowed is 20,000. That means deduction not allowed is what? 5,000. What they are trying to say, sir, this no problem, sir. This 10,500, no problem, sir. Hello, sir. Here, logically understand. Ladin is supposed to get 25,000 from the tenant. Ladin is saying to the assessing officer that, sir, I am supposed to get 25,000. AO is saying that, illada, you already received 5,000. 5,000 cannot be treated as unrealized rent. 5,000 cannot be treated as. That means Ladin would have paid tax for this 5,000. Am I right? Then, if Ladin paid tax for this 5,000, according to Ladin, this is receivable from the tenant in his books of accounts. In his books, have you really received? No, sir. It is received only as per AO, not received as per Ladin. Are you all really with me? According to Ladin, still it is what realized rent only? Unrealized rent only. That means, in future, if the tenant pays him how much? 15,000. What Ladin will think no? Out of 15,000 is 5,000, which I already paid tax. Remaining 10,000 only extra I received out of the unrealized rent. Concept clear? So, my dear lovable students, the unrealized rent will not be 15,000. Unrealized rent will be 10,000. Because why? Actual unrealized rent to be recovered is 25,000 man. Unrealized rent to be recovered. Correct, sir? Out of that, my dear lovable students, in earlier year, assessing officer said that unrealized rent or acceptable unrealized rent is only 20,000. That means Ladin would have paid tax for 5,000 even if it is not received. ஏன்னா ஏ ஒத்துக்க மாட்டேங்கிறாரு. அவர் என்ன சொல்றாருன்னா unrealized rent is only 20,000. It is not 25,000. Am I right? So, my dear lovable students, okay, Ladin said that. இந்தால் சொன்னா கேட்கிற மாதிரி இல்ல. I will pay tax now. Anyway, I will get in what? Future. Let this 5,000 rupees be receivable in my books of accounts. Right? In future, tenant is paying Ladin. Total how much? 15,000. How Ladin will think this 15,000? 5,000 is the old balance which I am supposed to be received. For this 5,000, I already paid tax. Now, I will not again pay tax. I will declare only an income of 10,000 as the unrealized rent. That's what they are calculating logically. What is the unrealized rent recovered? 15,000. Right, sir? That is the total amount recovered. Out of that total amount, what is the deduction claimed by Ladin? 25,000. But what is the deduction allowed? That means already he paid a tax on 5,000 rupees. That means, sir, this 15,000 comprises of that 5,000. Am I right? That means the extra unrealized rent recovered by Ladin is only 10,000. On that 10,000, 30% under 25A can be claimed, which come to 3,000. So the taxable IFHP will be 7,000. Logic clear? That's the note has been given. Where the AO, please be with me and sir, connect word by word. AO allowed the entire claim of unrealized rent as deduction. AO is saying that, Ladin, how much is the unrealized rent? 25,000. I am also allowing 25,000. That means Ladin would not have paid any tax for this 25,000. Am I right? Then, my dear lovable students, sum of 15,000 received is chargeable to tax in the year of receipt, and standard deduction of 30,000 is allowed under 25A. The position does not change even if Mr. Ladin has disposed of the property in March 2000, whatever it may be. That's the sum of 10,500. That's the answer we also got. 10,000 become chargeable under the head IFHP for assessment year 25-26. Simple. What the logic you have to understand? How much was the unrealized rent? 25,000. How much Ladin claimed? 25,000. How much AO allowed? 25,000. 25,000. That means 100% asked, 100% claimed. Case number 1. In case number 1, in future, if he is getting 15,000, he will declare entire 15,000 rupees as income. When he is declaring 15,000, he can claim 30% as standard deduction. Balance 10,500 will be taxable. Ulta pulta situation. My dear lovable students, he claimed 25,000, but if the AO allowed only 20,000, Ladin will scratch his head. Yennada, I have not received 25,000, but this guy is not understanding. This guy is saying that only 20,000 is the unrealized rent. That means, even though that 5,000 has not been received by Ladin, he would have paid tax for the 5,000. In future, if he recovered the unrealized rent, first what Ladin will think, no, appada, sir, without received, I have paid tax for 5,000. That 5,000 I have received. Now, that means how much totally given? 15,000. In that 5,000 is for the old item and 10,000 is the unrealized rent. Am I right? However, if the AO has allowed only 20,000 on unrealized rent as against the arrears of 25,000, the amount chargeable to tax out of 15,000 recovered will be 10,000. That's computation only given. Actually, this computation should be pasted here. We will paste below that. Clear? Case number 1 and case number 2. I will give you a super fantastic, outstanding question number 2, my dear lovable students. Mr. Anand sold his house property in March 2025. Actually, when you sell the house property, IFHP will not come. If you sell the house property, capital gain will come. That we are marching to the next chapter. In June 2025, he recovered rent of 10,000 from Mr. Gaurav, to whom he had let out his house for 2 years on April 2019 to March 2021. That means in our financial year 25-26, he has recovered 10,000 rupees as unrealized rent. Am I right, sir? That 10,000 will be taxable in the current year. There is no doubt. He could not realize 2 months rent of 20,000 from him, and to that extent his actual rent was reduced while computing the income from house property in assessment year 21-22. Actually, from that guy, 20,000 I am supposed to get. I gone and cried before AO that, sir, all the rule 4 condition has been satisfied. Please don't tax 20,000. AO also said that, okay, pa, that 20,000 will not be taxed. That means no problem. Now out of 20,000, 10,000 I am getting. So that 10,000 will be taxable now. Still 10,000 is receivable. I don't know. Hello, sir. Further, he let out his property from April 2021 to February 2025 to Mr. Sadish. Why? Because this guy has let out the property to Mr. Gaurav. My dear lovable students, from Mr. Gaurav, there is unrealized rent, right? If there is unrealized rent, that is one of the condition in rule number 4. That defaulting tenant should vacate the property. Then only rule 4 condition will be satisfied. Then only that amount will not be taxable. Accepting? So, Mr. Anand sent off Gaurav and he kept Sadish. Now coming to the story of the Sadish. In April 2023, he had increased the rent from 12,000 to 15,000 and same was subject matter of dispute. Actually, Sadish was staying there. Sir, Sadish and this guy has become so much parakam. He said that, from next year onwards, I am going to increase the rent. Sadish always say to Anand that, summa joke soladinga, sir, like that. Okay. Sir, Anand is saying that, I am very serious, I am going to increase the rent from 12,000 to 15,000. Sir, don't joke me, sir. I will not give you any extra rent. I will give only 12,000 rent. That means here, Gaurav has not paid rent of 20,000. That is unrealized rent. Here, Sadish is paying rent of 12,000, not 15,000. That means 3,000 is not paying. That is arrears of rent. Are you all really with me? Sir, what is the difference? Gaurav is not paying rent at all. That means it's unrealized rent. But Sir Sadish is paying rent, not the rent which the owner is asking. Rent Sadish is thinking. Are you all really with me? That means I cannot say that it is an unrealized rent. I'm realizing the rent, but not up to my satisfaction. So that's why they are saying the subject matter was in dispute. Sunday. I'm saying that I need rent of 15,000. Sir Sadish is saying that in all this, in the same area, next to my neighbor, above neighbor, and all paying only 12,000. Then why are you asking me 15,000? Don't torture me. This Sunday was going for a long time. Whenever Anand comes, sir, before the Sadish house, immediately padal, he door close. He's the owner. In September 2025, okay, our financial year, matter was finally settled. And Mr. Anand received 69,000 as what of rent? Arrears of rent for the period for April to February. My dear lovable students, what would the recovery of unrealized rent and arrears of rent be taxable in the hands of Mr. Anand? Why not? Sure, sir. If so, in which year? In the year of receipt. In the year of receipt, that income will be taxable. And my dear lovable students, that will be taxable after claiming standard deduction of 30%, not under 24A, but under 25A. Computation of income from house property of Mr. Anandan. What is the unrealized rent recovered? 10,000. What is the arrears of rent recovered? 69,000. What is the subtotal? 79,000. Now you don't go and reduce LT bar MT and all. Are you all really with me? Just to reduce standard deduction of 30%, which is nothing but 79,000 into 30% comes to 23,700. You will be getting the answer as income from house property of 55,300. You have to write the story what you have studied. Since the unrealized rent was recovered in our year. What is our year? 25-26. Same would be taxable in assessment year 26-27. Under what section? 25A. Irrespective of the fact that Mr. Anand was not the owner of the house in that year. Clear? Further, the arrears of rent was also received in our year, and hence the same would be taxable in assessment year 26-27 under 25A, even though Mr. Anand was not the owner of that year. Right, sir? When you are taxing unrealized rent, when you are taxing arrears of rent, you can claim a deduction of 30% of unrealized rent recovered, and arrears of rent would be allowed while computing income from house property of Mr. Anand for assessment year 26-27. Are you all really with me? That's it with regard to two very important concepts for exam. Number one is co-owner, which are covered in section 26. Receipt of unrealized rent or taxability of unrealized rent and taxability of arrears of rent as per 25A. I'm moving into question number one. Sir, we'll be discussing the question. I will not be solving all the question, but I will be going through the answers and how it comes, because in the illustration question and all I solved and we have checked it. Right, sir? Mr. Manas owns two house property, one at Bombay, wherein his family resides, and the other in Delhi, which is unoccupied. As we all know that for an individual, two house property are allowed. Both can be self-occupied property. No need to step into delope. Am I right, sir? For acquisition of the house property at Bombay, he has taken a loan of 30 lakhs at how much percent per annum? 10% per annum. That means 30 lakhs into 10% comes to 3 lakh is the interest on borrowed capital. Sir, you have to remember one thing. The property is a self-occupied property. For a self-occupied property, maximum interest will only be 2 lakh. He has not repaid any loan so far. In respect of the house property at Delhi, he has taken a loan of 5 lakh at 11% per annum on 1/10/2024 towards repair. So my dear lovable students, the second loan was for 5 lakh. 5 lakh into 11% comes to 650, 55, yeah? 55,000. But this loan was for repairs of the property, my dear lovable students. It should be restricted to 30,000. Actually, no use, because in the first house itself, you will be enjoying entire 2 lakh. Am I right? That extra 1 lakh itself, you have to put it on dustbin. But you can claim it as chapter 6A deduction. We can come and discuss. No problem at all. And this 50,000 has to be restricted to 30,000. Again, that has to be totally in total to total restricted to. Compute the deduction which would be available to him under 24B for assessment year 26-27. In respect of interest payable on such loan, if we exercise the option of shifting out of the default tax regime provided under 115 BAC, because if an assessee is traveling through the default tax regime, there is no question of 24B at all. Only if an assessee travel through the optional tax regime for a self-occupied property, he can claim deduction under 24B. Am I right? The answer is very simple. Similar question we have solved there itself. Am I right? Mr. Manas can claim benefit of nil annual value in respect of his house property both at Bombay and Delhi. Because for an individual, my dear lovable students, 2 house properties are allowed. Am I right, sir? He is eligible for deduction under 24B since he has exercised the option of shifting out of the default tax regime provided under 115 BAC subsection 1A. Sir, computation of deduction under 24B for assessment year 26-27. Am I right, sir? For the first property, man, sir, at Bombay, property at Bombay, 30 lakh rupees was the loan into 10%, 3 lakh rupees. But it will be restricted to, because all the 3 conditions has been satisfied. So 2 lakh rupees is the allowable deduction. Am I right? Sir, for the Delhi house, my dear, you have taken 5 lakh rupees loan at the rate of 11%. Don't get confused with the date. The date is 1/10/2024. That is a loan taken in financial year 24-25. Am I right? Our financial year is 25-26. Am I right? My dear lovable students, that means 6 months period will be there only for the last financial year, not for our financial year. So for our year, entire 11% will be applicable, which is 55,000, which will be restricted to, because a loan has been taken for the purpose of repair. So here 30,000 will be the outer column. Total interest will be 2,30,000. Total deduction is not 2,30,000. Total interest is 2,30,000. Whereas, my dear lovable students, deduction under section 24B in respect of 1 and 2 above should be restricted to, because for an individual assessee, maximum interest to be allowed under 24B if we travel through the optional tax regime is 2 lakh. Able to appreciate? Sir, certificate to be furnished? Yes, sir. It is mandatory that certificate has to be furnished from the bank. For the purpose of claiming deduction of how much lakh? 2 lakh. In the table given above, assessee should furnish a certificate from the person to whom any interest is payable on the capital borrowed. Nothing. From the bank, you have to get a certificate saying that this much interest has been paid to the bank during a particular year. Otherwise, government will get easily cheated. No. Are you all really with me? Without paying interest, you will simply say that I'm having 24B, which is NABC, IOBC. So government is saying that these are procedural aspects. If you want deduction under 24B, certificate, interest certificate has to be furnished, specifying the amount of interest payable by the assessee for the purpose of such acquisition or construction of the property or conversion of the whole or any part of the capital borrowed which remain to be repaid as a new loan. So that loan should be for the purpose of either construction or should be for the purpose of either acquisition or repayment of old loan that we already discussed. Sometimes that 25,000 rupees old loan was there. In that 21,000 rupees has been paid, 4,000 rupees has not been paid. There was an unpaid interest to repay that. Since we have not paid 4,000 rupees, my dear lovable students, 450 rupees interest on interest has been put. In order to repay that loan, we took another new loan. For that, we paid an interest of 5,000 rupees. So 25,000 rupees plus 5,000. 30,000, that divided by 2, 12,500 and 12,500 we have claimed in the hands of the Arun Bimal or the brothers cases. Am I right? Fantastic to the core. That means, my dear lovable students, that house property should be for the purpose of construction or acquisition or for repayment of the old loan. For that I have taken a new loan, then interest is for that purpose. Then, my dear lovable students, you can enjoy deduction under 24B. Are you all really with me? We can happily move into question number 2, man. Mr. Vikas owns a house property whose municipal value, fair rent, standard rent, 96,000, 1,26,000, 1,08,000 per annum respectively. Immediately don't go and count fair rent or municipal value, whichever is higher or standard and whichever is lower. That answer is called as expected rent. If the property is self-occupied property, why are you doing all those stuff? Wait. Avasaram. During financial year 25-26, 1/3 of the portion of the house was let out for residential purpose at a monthly rent of, that means what type of property? Portion self-occupied and portion let out. Then Vijay table we have to put. Am I right, sir? The remaining 2/3 portion was self-occupied by him. Okay. Municipal tax at 11% of the municipal value was paid during the year. Construction of the house began in June 2018. In 18 itself, we started constructing the house and was completed on 31/5/2021. even though you completed on 5th month, always the prior period interest will close on 31/3/2021. Am I right, sir? Because 31st March of the immediately preceding previous year, in which construction has been completed, is the prior period. Vikas took a loan of 1 lakh on 1/7/2018 for the construction of the building. He paid interest on loan at the rate of 12% per annum, and every month such interest was being paid. Sir, compute income from house property of Mr. Vikas for assessment year 26-27 if he has exercised the option of shifting out of the default tax regime provided under 115 BAC. The twist is with the third point. What they are saying is Vikas took a loan of how much lakh? 1 lakh on 1/7/2018 for the construction of the building. Adu tappilla. He paid interest on loan at how much percent per annum? And every month such what was paid? Interest was paid. Principal has not been paid. That means every month interest has been paid. Am I right? So I'm going to calculate computation of income from house property of Vikas. Sir, for the let out portion first. You tell me what is the proportion? 1/3 is let out and 2/3 is self-occupied. That means majority of the portion is self-occupied. Am I right? Always, my dear lovable students, our table is the best table in the sense means master table. Total you have to put, then SOAP, then LOP. Are you all really with me? Yes, sir. This is the total. Always the proportion should be 100%. And for self-occupied property, it is 2/3 and let out property is 1/3. Am I right with the numbers? Sir, now I am forced to split all the basic data given in the question like municipal value. Tell me what is the municipal value? 96,000. So my dear lovable students, municipal value 96,000 into 2/3. 64,000. 96,000 into 1/3. 30. That's it. Sir, municipal value comes to 1. Coming to fair rent, man, 1,26,000. So fair rent is equal to 1,26,000. Please split it. 84,000 for the self-occupied property. 42,000 for the let out portion. Am I right, sir? And standard rent, my dear lovable students, what is the total? 1,08,000 is the standard rent. Sir, 1,08,000. 72,000 for the self-occupied property. 36,000 for the let out property. Am I right, sir? These are the basic information. Then monthly rent, man. What is the monthly rent? 5,000. So monthly rent or actual rent received will be 60,000. Entire 60,000 will be given to the let out portion, and there is no vacancy and all given in the question. There is no unrealized rent given in the question. No such confusions are there. Am I right? With regard to IOBC, interest on what capital? Borrowed capital. The loan has been taken. For which year you are calculating, my dear? For assessment year 26-27, our year, right? That means loan has been taken on June 2018 and construction has been completed on 31/5/2021. That means there is sufficient prior period are there, right? So my dear lovable students, I have to calculate the prior period interest. Always the prior period interest will start from the date of taking loan. Am I right? When they have taken loan? June 2018. And always the prior period will end on 31/3/2021. Am I right? Yes, sir. Because on May, sir, 31/5 construction has been completed. 31/5 means May. May just 1 month. April just 1 month. That's why 31st of March. That means, my dear lovable students, 18-19 is there, 19-20 is there, and 20-21 is there. This is what? Prior period. Even in 18-19, June 2018 is there. Am I right? So June, July, August, September, October, November, December, January, February, March. That means how much one? Whereas this is for 12 months. Even this is for, that means, my dear lovable students, 12 plus 12, 24 plus 10, total 34 months interest are prior period and the remaining are the current year interest. Am I right? What is the amount of loan? 1 lakh. So my dear lovable students, 1 lakh into 12% is equal to 12,000. This will be the annual interest or this will be the interest for 12 months. Am I right? So prior period interest is equal to 12,000 divided by 12 into 34 months. Am I right, sir? That means 12,000 divided by 12 means every month 1,000 rupees interest. 1,000 into 34 means 34,000 rupees is the Prior period interest. You can calculate this way also individually. You'll be getting 12,000 here. You'll be getting 12,000 here. Here 12,000 into 10 divided by 12, 10,000 here. So then also you will be getting 34,000. Are you all really with me? So my dear lovable students, sir, you can't claim entire prior period interest in one shot. You can claim only 1/5 of the prior period interest plus current year interest. Am I right? Plus current year interest. Tell me, my dear lovable students, 34,000 into 1 by 5 comes to 6,800 is the share of the prior period interest. Plus current year interest will be 12,000 because entire loan is outstanding. Only we are repaying the interest. Am I right? So 6,800 plus 12,000 comes to 18,800 is the total IOBC. That I have to write here as 18,800. Hello. That has to be bifurcated in the ratio of 2:3. So 18,800 into 2 by 3 comes to 12,533.33 is the amount of interest attributable to self-occupied property. Yeah. So 18,800 minus 12,533.33 comes to 6,266.67 is the interest attributable to let out portion. Come on, man. Sir, have you all read the question? Yes, sir. Is there any other thing to, sir, split it? Municipal value, which is 11% of the municipal value. So municipal tax is the municipal tax at 11%. What is the municipal value? So 96,000 into 11% comes to 10,560. Am I right? Loan taken? First July. 1/7. Construct, okay. Loan on 1st July. So the entire calculations will be changed. Correct? July, August, September, October, November, December, January, February, March. How much months, man? So instead of 34 months, here it will be 33 months. Am I right? Okay, sir. If it is 33 months, man, automatically instead of 10,000, here it will be 9,000. Am I right, sir? So total 33,000. So total prior period interest will be 12,000 is the interest for 12 months into 33 months means total interest will be on that 33,000 we can claim 1/5. So 33,000 into 1 by 5 comes to 6,600 plus 12,000 comes to 18,000. Okay, man, this I am updating here. 18,600. 18,600 into 2 by 3 comes to 12,400 and other 6,000. Okay, man. Thank you, man. Sir, municipal tax at the rate of 11%. You split it, man. 10,560 into what by what? 2 by 3 comes to 7,040 is the municipal tax attributable to the self-occupied property. Minus 10,560 minus 7,040 means 3,520 is the municipal tax attributable to the let out property. That's it, man. Can we, sir, straight away march to the answer? Gross annual value, man. Sir, gross annual value for a let out portion is the actual rent received or receivable. I can finalize here. Look at here, man. Sir, what is the fair rent? 42,000. What is municipal value? Whichever is higher, or standard rent 36,000. Whichever is lower, 36,000. But actual rent received or receivable is 60,000. Whichever is higher is 60,000. Accepted? Less LT bar MT paid by the owner. We have already bifurcated the LT bar MT, which is 3,520 is the LT bar MT. Can I proceed? So the NAV is 56,480. Am I right, sir? Less deduction under section 24A, 30% of NAV. Am I right, sir? Sir, 56,000 what 80? 480 into 30% comes to 16,944 is the standard deduction. Less NABC, IOBC. Just now we have pakka done. The IOBC for the let out portion is 6,200. 6,200, man. So taxable income from the let out property comes to 33,336. Am I right? Whereas for the self-occupied portion, which is 2/3, NAV is nil. Always NAV is nil. Less deduction under 24B, since the assessee is traveling through the optional tax regime, assessee is entitled to claim 12,400 as IOBCR. So you will be getting, sir, loss from self-occupied property of 12,400. Am I right? That means the net income from house property. Sir, actually from let out property, you are having an income of 33,336. From the self-occupied property, you are having a loss of 12,400. Net taxable income of 20,936. Sir, they have attached the note number 1, how to compute the GAV. Nothing man, fair rent or municipal value, whichever is higher, or standard rent, whichever is. Sir, the answer is called as expected rent. Hello, sir. Expected rent or actual rent received or receivable, whichever is. Are you all really with me? So the answer here is 1,08,000 rupees is the expected rent. Sir, interest for the year 1/4/2024 to 1/4/2025. In our year, it is 25-26. Yes, sir. 12% of 1 lakh. It is 12,000. That means for 25-26, my dear lovable students, sir, for the current year interest is 12,000. Am I right? Pre-construction period interest is 12% of 1 lakh for 33 months. Sir, question, construction of the house began in June and was completed on this date. Vikas took a loan of rupees 1 lakh only on 1/7. Only from the date of taking loan, interest will start. Right, sir? So, my dear lovable students, 33 months is the total interest period. From 1/7/2017 to 31/3/2020. 21. Sometimes the date may not be changed. 21. Just 1 year shift only. My dear lovable students, always the prior period interest should close on 31st March of the immediately preceding previous year in which a construction has been completed. Am I right, sir? Pre-construction period interest to be allowed in how many equal installment? Of rupees 6,600 from the year of completion of construction, that is from 2021 till financial year 24-25. In the sense means from the year of completion till next 5 year that can be completed. Therefore, total interest deduction under 24 is 12,000 plus 6,600 is equal to 18,600. Interest on borrowed capital of 12,400 is allowable since he shifted out of the default tax regime. Are you able to appreciate? That's it with regard to question number 2, man. I am moving into question number 3. Sir, Mrs. Rohini Ravi, a citizen of USA, is a resident and ordinarily resident in India. Sir, if an assessee is a resident and ordinarily resident, global income is taxable in India. That means even though if you are having a property situated outside India, income will be taxable in India. Am I right? During the financial year 25-26, she owns a house property at Los Angeles, USA, which is used as her residence. That means it's a self-occupied property. Nothing to be taxed there. Annual value of the house is $20,000. Put it on dustbin. Value of $1 may be taken at 75. Again put it on dustbin because the property is a self-occupied. She took ownership and possession of a flat in Chennai on 1/7/2025, which is used for self-occupation while she is in India. It is allowed because for an assessee, 2 house property are allowed. One in outside India and another in India. The flat was used by her for 7 months only during the year under 31/3/2026. Municipal valuation is 3,84,000 and fair rent is 4,20,000 per annum. Again put it on dustbin. She paid the following to Corporation of Chennai: property tax and sewerage tax. Since a property is self-occupied property, LT bar MT paid cannot be claimed as a deduction. So this cannot be claimed as deduction. Again put it on dustbin. She had taken a loan from Standard Chartered Bank in June 2023 for purchase of this flat. That means Chennai flat. For that you are entitled to claim IOBC, provided if she is traveling through the optional tax regime. Interest on loan was as under prior period to 1/4/2025, 49,200. This 49,200 can be claimed in 1/5. Am I right? From 1/4/2025 to 36/2025 till 1/7/2025 to 31/3/2026. Basically confusion. No need of it. Both interest has to be added to get the current year interest. Am I right? Sir, up 50,800 plus 1,31,300 comes to 1,82,100 is the total current year interest. And on this 49,200, you will be getting 9,840. Am I right? Because 1/5 of the prior period interest plus 100% of the, she had a house property in Bangalore. She had. So earlier she had a house property in Bangalore, which was sold in March 2022. Okay, fine. In respect of this house, she received arrears of rent of 60,000 in March 2026. As per section 25A, arrears of rent and unrealized rent will be taxable in the year of actual receipt, even though you are not the owner of the house property. Am I right? This amount has not been chargeable to tax earlier. So now you can claim 30%, sir, deduction under 25A, not under super. Compute the income chargeable from house property of Mrs. Rohini Ravi for assessment year 26-27 if she has exercised the option of shifting out of the default tax regime under 115 BAC. Would your answer change if she pays tax under the default tax regime under 115 BAC? Yes, sir, my answer will change. Sir, if she is traveling through default tax regime, there is no concept of self-occupied property at all. Right? If she is traveling through optional tax regime, IOBC can be claimed it as a deduction. So the only calculation is what? IOBC. Come on, man. Since assessee is a resident and ordinarily resident, her global income form part of her total income. Am I right? That is income earned in India as well as income earned outside India will form part of her total income. She possesses self-occupied house at Los Angeles as well as at what? Chennai. She can take the benefit of nil annual value in respect of both the house property, because as per Income Tax Act, for an individual, both the two houses can be taken as self-occupied property. As regards the Bangalore house, arrears of rent will be chargeable to tax as income from house property in the year of receipt under 25A. Am I right? It is not essential that assessee should continue to be the what? Owner. 30% of the arrears of rent shall be allowed it as a deduction. Accordingly, income from house property of Mrs. Rohini Ravi for assessment year 26-27 will be calculated as follows. Self-occupied property at Los Angeles will be nil because regarding that American property, no interest has been paid. Am I right? Interest has been paid regarding the Chennai property. Hello, sir. Loss from self-occupied property, my dear lovable students, look at here. With regard to Chennai property, 1,82,100 is the current year interest. So 1,82,100 plus prior period interest total 49,200. But we can't claim in one shot. We have to claim only 1/5. So plus 9,840 comes to 1,91,940 is the amount of IOBC that you can claim. My dear lovable students, since all the condition has been satisfied, maximum IOBC will be 2 lakh, but it comes only 1,91,000. So I will be claiming only 1,91,940. Am I right, sir? For arrears of rent in Bangalore property, as per section 25A, actually you got how much rupees as arrear? 60,000. On that you can happily claim a standard deduction of, so balance 70% will only be taxed, which comes to 42. That's what arrears in rent, my dear lovable students, from the Bangalore property. Taxable amount is 42,000. Hello, sir. But you have to show, as per section 25A, arrears in respect of Bangalore property, annual value 60,000. That's deduction at 30%, 18,000. IFHP, 42,000. Are you able to appreciate, sir? Come on, man. So the total income from house property will be 1,49,940 because it's loss. IOBC interest is higher. Sir, Los Angeles property, the property in, sir, what man? Australia. You tell me annual value? Nil. There is no deduction under 24. Automatically chargeable to house property will be nil. This nil has been carried forward here. Am I right? With regard to house property at Chennai, annual value will be nil. Why? Self-occupied property. Let's deduction under 24B. 1,91,940, which is nothing but 1/5 of the prior period interest plus the current year interest. So you will be getting loss under the head income from house property. Am I right, sir? Already we just talked about the arrears of rent. Coming to IOBC, man, interest for the current year is nothing but 50,800 plus 1,31,300. During our year, they have unnecessarily split the data. Am I right? Both has to be added and add 1/5 of the prior period interest. Total prior period interest is 49,200 into 1/5 comes to 9,840. So interest Deduction allowable under 24 will be 1,91,940. Am I right? Sir, interest deduction under 24B is allowable since she has exercised the option of shifting out of the default tax regime. Sir, if she is traveling through the default tax regime, then there is no concept of self-occupied property at all, and the arrears of rent will be taxable after deduction of 30%. Then the total income will be 42,000. Am I right? Yes, the answer would change if she pays tax under the default tax regime under 115 BAC. Under the default tax regime, deduction under 24B for interest is not available. Hence, she cannot claim deduction of 1,91,940. In respect of the Chennai house, accordingly, income from house property would be 42,000. Are you all really with me? The similar line of question has been attached as question number 4. Mr. Rocks, a citizen of country Y, is resident but not ordinarily resident in India. Just now we talked about an assessee, resident and ordinarily resident. Then global income is for a resident but not ordinarily resident. Here I have added, here I have put an into. Resident but not ordinarily resident. Global income is not taxable in India. Only if the house property in the income received in India will be taxable in India. Received in India will be for the financial year 25-26. He owns 2 house property in country Y. One is used as his residence. Fine, that is allowed. Another house property is rented for a monthly rent of $18,000. Immediately don't say that that is a let out property. That let out income will be taxable in India because this guy is not a resident and ordinarily resident. This guy is a resident but not ordinary. Fair rent of the house property is how much? 20,000. The value of 1 Canadian dollar may be taken at rupees 78. Where this guy is situating? Country Y. Okay, fine. I don't know what is the currency. So we can, sir, some CYD dollar, right, may be taken at 78. He took ownership and possession of flat in Delhi on 1/10/2025, that means our year, which is used for self-occupation while he is in India. That is actually allowed. The flat was used by him for 2 months at the time when he visited India during 25-26. The municipal valuation is 4,58,000 and fair rent is 3,60,000. He paid property tax of 13,800 and 2,800 as sewerage tax to Municipal Corporation of Delhi. He had taken a loan of 18 lakh at 9.5% from HDFC Bank on 1st August for purchasing this flat. No amount is repaid by him till 31/3/2026. He also had a house property in Bangalore which is let out at a monthly rent of 40,000. Fair rent of which is 4,58,000 and municipal value is 25 lakh at 10% from one of his friend residing in country Y for this house. Municipal tax of 5,400 is paid by him in respect of this house during the previous year 25-26. Compute the income chargeable from house property of Mr. Rocks for the assessment year 26-27 if he is shifted out of the default tax regime. Veedu mela veedu vechirukkaru. Correct, sir? This is the, sir, most expected question from the income from house property. Like this question only will be tested in exam. Let me ask you a question, my dear lovable students. Rocks is having a property in country Y. Am I right? Sir, Rocks is having a property in Delhi. Am I right? Sir, Rocks is having a property in Bangalore. Am I right? My dear lovable students, the what is doing with the country Y property? Let out property. From that, is he getting rental income? Yes, sir. In question, anywhere they said that rental income has been taken to India. Okay, fine. Sir, Delhi property, what is doing? Self-occupied. Sir, for an assessee, 2 property can be taken as the self-occupied property. What is doing with the Bangalore property? Let out property. Am I right? For a rent. For whom? One of his friend residing in country Y. Hello, sir. That means 3 properties are there. Sir, come on, man. Since Mr. Rock is a resident but not ordinarily resident in India, only the income in respect of property situated in India would be taxable in his hands. Because for the property situated outside India, only if the income has been received in India, it will be taxable in India. Because this guy is not resident and ordinarily resident. This guy is resident but not ordinarily resident. Am I right? That's the rental income which accrues or arises in where? Country Y from the let out property. and annual value of the self-occupied property would not be taxable in his hands. However, income arising from property in India are taxable in the hands of Mr. Rocks. This is called as scope of total income. That means whatever income I have derived in India, outside India, what will be taxable in India? What is its scope? Everything will not be taxable in India. For taxing everything, you should be a resident and ordinary resident. If you are a resident but not ordinarily resident, only income accrued or arises in India will be taxable. Income accrued or arises outside India will be taxable in India if you have brought the income to India. Are you all with me? So, computation of income from house property of Rocks for assessment year 26-27. Sir, income from house property we are calculating. Self-occupied property, Delhi. Yes, he's having self-occupied property in Delhi. Am I right, sir? You tell me, man, since a property is self-occupied property, the annual value will be nil. Can I proceed? There is no question of 24A at all. There is question of 24B, which is IOBC. Sir, have he taken any loan? Yes, sir. Sir, have he taken any loan? Yes, sir. Sir, this Pakka they are saying no. He took ownership and possession of flat in where? Delhi on 1/10/2025. That means he started staying in Delhi house from 1/10. Sir, which is used for self-occupation while he is in India. The flat was used by him for how much month? 2 months. At the time when he visited India. During the previous year, 25-26. Municipal valuation 4,58,000, put it on. And fair and 3,60,000, put it on. He paid property tax of 13,800 and 2,800 as severage tax to Municipal Corporation of Delhi. Since a Delhi property is a self-occupied property, whatever LT bar MT paid by the owner cannot be claimed it as a deduction. Am I right? He has taken a loan of 18 lakh at 9.5% from HDFC Bank on what date? 1st August 2023 for purchase of this flat. This flat means Delhi flat. No amount is repaid. Let me ask you one question. For this, he would have paid interest. That interest, can he claim it as IOBC? Yes, sir. You tell me, sir, when he started constructing this flat, have they said anything regarding the construction details? No, sir. It is acquisition. Am I right, sir? Okay. Then I'm going to calculate the IOBC, man. Sir, you just look at the question and tell me, what is the amount of loan? 18 lakhs. What is the rate of interest? Okay, man. Sir, 18 lakhs into 9.5% comes to 1,71,000 rupees is the current year interest, basically. Am I right, sir? Sir, in this question, sir, he also had house property in where? Bangalore, which is let out on a monthly rent of how much? 40,000. Payer rent of which is 4,58,000 and the municipal value is at 10% per annum from one of his friends residing in country Y for this house. Municipal tax of 5,400 is paid by him in respect of this house during 25-26. Sir, is there any prior period interest and all given concept given in the question? Tell man, is there any prior period interest? He had taken a loan of 18 lakh at 9.5% from where? From where? On what date? 1st August 2023. But he took ownership and possession only on 1/10/2025. That means even though this is for acquisition, he took some time to acquire the property. Because after taking loan, sometimes, sir, that possession, the property may be under construction or some legal formalities may be there. Something, he took some time. So what is the date of taking loan? Tell me, Pakka. 1st August 2023. So I'm going and writing, man. 1st August 2023 is the date of taking loan. When he got the possession, 1/10/2025. Leave the date of possession. Come to 31st March. Right, sir? So 31/3/2025 is the end of the prior period. Are you able to place? That means 23-24, 24-25. That's it. From 1st August means August, September, October, November, December, January, February, March. How much month? And here obviously 12 months. That means 8 plus 12, 20. is the prior period. Am I right, sir? Let me ask you a question. What is the amount of loan? So 18 lakhs into what is the percentage? 9.5 percentage. Sir, so that means what is the annual interest? 1 lakh 70? Okay, man. Sir, divided by 12 into 20 months means you will be getting total prior period interest. So 1,71,000 divided by 12 into 20 comes to. This is the total prior period interest. This has to be claimed in how many equal installment? Sir, in 24-25, prior period is getting over. Then 25-26, our year will be year number 1. Am I right? So 2,85,000 divided by 5 comes to 57,000 is the share of prior period interest from 25-26, 26-27, 27-28, 28-29 and 29-30. Am I right, sir? So my dear lovable students, that's what. Don't stop your computation with the current year interest. I have to add 1/5 of the what period interest, which we have find out that as 50. That's what they are also doing, 57,000. How they got 57,000? They are calculating from 1/8/2023 till 31/3/2024 is the prior period. That means 18 lakhs is the loan amount, 9.5% is the interest rate. Sir, into, sir, total for 12 months, 8 divided by 12, 1,14,000. Then for next year, 24-25, for the entire year, 1,71,000. They will be getting total 2 lakh and that 2,28,000 has to be claimed over a period of. So 2,28,000 total. 1 lakh total prior period, which is 1,14,000 plus 1,71,000. Total comes to 2,85,000. So that 2,85,000 has to be claimed over a period of. So divided by 5 comes to 57,000. So now 1,71,000 plus 57 total comes to. This should be restricted to 2 lakh as per section 24B. Are you all really with me? That's what they have written here. Self-occupied property in Delhi, which is 2 lakh. Come on. Game is not over. Still, let out property in Bangalore is there. To his friend, some person, let out property in Bangalore is there. Come on, man. Sir, let out property in Bangalore. Sir, I have to calculate the expected rent, which is nothing but fair rent or municipal value, whichever is higher. Sir, whichever is higher or standard rent, whichever is lower. Every details has been given in the question itself. For example, fair rent is 4,58,000. Municipal value is 25 lakhs. 25 lakhs. So 4,58,000 and 25 lakhs are 2,50,000 now. Whichever is higher. Is there any standard rent given in the question? No, sir. Because municipal fair rent and municipal value is having that much deep difference. Hello, sir. So look at here, man. He also had a house property in Bangalore, which is let out on a monthly rent of 40,000. The fair rent of which is 4,58,000 and municipal value is 25 lakh at 10%. Municipal value at 10% from one of its friend residing in country Y for this house. Municipal tax of 5,400 is paid by him in respect of this house during the previous year 25-26. Standard rent details and all not given. Expected rent being higher of 3,58,000 municipal value, fair rent 4,58,000, but restricted to standard rent of 4,20,000. Question, sir, something will be missing in the question. Okay, fine. Actual rent of 40,000 into 12. Yes, sir. 40,000 into 12 comes to 4,80,000. Sir, some details may be missing in the question, man. GAV will be, we know that higher of N or N. Expected rent or actual rent, which comes to 4,80,000. Less municipal tax 5,400 paid given in the question. NAV is 4,74,600. Am I right, sir? 30% of NAV is 4,74,600 into 30% comes to 1,42,380. Then IOBC, sir, how much is the loan amount? Actually, here mistake. 25 lakhs loan at the rate of 10%. 25 lakh into 10% comes to, there 1 or 2 lines are missing in the question. That's why 2,50,000 has been came. Fine, man. Sir, you will be getting income from the let out property of 82,220. Hello, sir. That's it, man. Sir, from the self-occupied property, anyway you will be having loss. From the let out property, you are having income. So income from house property is 1,17,780 rupees loss. What is the takeaway from this question? Sir, simple. If the assessee is resident and ordinarily resident, global income is taxable in India. If an assessee is resident but not ordinarily resident, only Indian house property will be taxable in India. Foreign house property will not be taxable in India. But from that foreign house property, if the assessee is having any income and that income has been brought to India, that will be taxable in India. Are you all really with me? I will correct the figures in the question. Then if you try, you'll be able to appreciate or understand. Nothing more conceptual is there because we know how to find out the GAV for a let out property. Am I right? Mr. Roy owns a house in Kolkata. During the previous year 25-26, 3/4 portion of the house was self-occupied and 1/4 portion was let out for residential purpose at a rent of 12,000 per month. Normal, portion self-occupied, portion let out. Tenant vacated the property on 28th February. That means there is vacancy. February 28th vacated. That means March month, 1 month will be vacant. Property was vacant during March. Rent for the month of January and February could not be realized in spite of owner's effect. Oh my God. January and February are unrealized. All the conditions prescribed under Rule 4 are municipal value of the property is 4,50,000 per annum. Fair rent is 4,70,000 per annum. Standard rent is 5 lakh. He paid municipal tax at 10% of the municipal value during the year. Loan of rupees 30 lakhs was taken by him during 2018 for acquiring the property. Interest on loan during 25-26 was 1,50,000 is the question. Compute Roy's income from house property of assessment year 26-27 if he has shifted out of the default tax regime. Very normal, straightforward question. Am I right? Sir, there are two units are there. Unit 1 with 3/4 area is used by Roy for what occupation? And no benefit is derived from that unit. Hence, it will be treated as self-occupied property. Its annual value will be nil. Sir, the annual value of a self-occupied property is nil. Am I right? Unit 2 with 1/4 area is let out during the previous year and its annual value has been determined as 23 subsection 1. So computation of income from house property of Mr. Roy for assessment year 26-27. Income from unit 1, I have to separately calculate, man. Every data has to be converted into 3/4 by using our master table. Am I right? Anyway, annual value will be nil. Am I right, sir? Deduction under 24B, sir. What is the total interest on loan paid during the previous year 25-26 is 1,50,000. Sir, what is this our house property share? 1/3 or 1/4? What is the share? 3/4 and 1/4. That means 1,50,000 into 3/4. Tell man. 1,12,500 should be the interest. Ayyo. Sir, income from unit 2, 1/4 of area let out. Gross annual value. What is the gross annual value? I have to find out. Tell me. Fair and municipal value, whichever is higher, we have to put the standard table. Then only we will get. Otherwise, it's very difficult to find out. Correct, sir? Here we'll be putting total, man. Here we'll be putting self-occupied property. Here we'll be putting let out property. Total always proportion 100%. SOAP percentage 3/4. 3/4. LOP 1/4. Right, sir. Come on, sir. Data 1/1. Monthly rent. Actual rent received, which is 12,000 into 12. 1,44,000. 9 months. Vacancy. This is actual rent receivable. In that 1 month vacant, 2 month unrealized rent. Correct? So, actual rent received will be 12,000 into 9. Am I right? Come on, man. 12,000 into 9 comes to 1,08,000 is the total which fully goes and sit in the let out property. Am I right? Okay, sir. Then, man, next one. What is the next data given? Municipal value. Municipal value total 4,50,000 into 3/4. 3,37,500. And let out portion 1,12,000. Okay, man. Municipal value done. Then the next one, fair rent. Tell me, fair rent. 4,70,000. 4 lakh 70, verum 4 lakh 70. 4 lakh 70,000 into 3/4. 3 lakh 50. Okay, man. Let out portion. 1 lakh 70,000. 17. 1 lakh 17,500. Am I right, sir? What is the next one? Standard rent. Standard rent total 5 lakh. 5 lakh into 3/4 comes to 3 lakh 70. Okay, man. 1 lakh. Am I right, sir? Super, sir. Municipal tax at the rate of 10%. Tell me what is municipal value? 4 lakh 50,000 into 10%. 45,000 into 3 by comes to 33,750. Sir, balance 11,250. Am I right? A loan of rupees 30 lakhs was taken by him in 2018 for acquiring the property. Interest on loan paid during previous year 25-26 was 1,50,000. That means, sir, IOBC's total only 1,50,000. Am I right? Actually, prior period interest details is missing because current year loan paid is only 1,50,000. Yeah, loan taken in 2018. Okay, if you split this na 1,12,500 and 37,500. Now, with that information, my dear lovable students, unit 1 self-occupied property, IOBC is 1,12,500. Okay, man. Unit 2 let out, sir, GAV, I have to work out. Tell me, fair rent or municipal value, whichever is higher. 1,12,000, 1,07,000, whichever is higher, 1,17,500. Or standard rent, whichever is lower. 1,17,500. Actual rent received, whichever is higher. Will you take that? No, sir. Yeah. There is unrealized rent I have reduced. There is vacancy and that vacancy is genuine. If vacancy is equal to genuine, actual rent received will be the GAV. Am I right? Let it be there. Let's LT bar MT paid by the owner during the previous year during the let out portion. Sir, the LT bar MT is 11,250. So 11,250 is the LT bar MT. You will get net annual value of 96,750. Am I right, sir? On this 96,750, 30% comes to 29,075. Am I right, sir? 20. No, sir, problem. 29,025. Am I right, sir? There are certain items which are not correct. Correct answer, correct answer. All right, sir. IOBC, sir, what is the total? 1,50,000. Yeah. We'll change this figure to 1,51,000. Okay. 1,51,000. So here 1,51,000 into, I'm talking about self-occupied. Okay. 1,51,000 into 3/4. 1,13,250. Okay. Pakka. Right, sir? Because here also there is a mistake, man. So 1,51,000 into 1/4 comes to 37,750. Is the interest attributable to? Alright, sir. So income from unit 2 let out is 29,975. That I am uploading here, 29,975. So the income from house property after knock off the loss is 83,275. Loss. Am I right? I think remaining mathematically right, man. GAV they have calculated. Even we have calculated decently. Are you all really with me? Sir, municipal value or fair rent, sir, standard rent, whichever is lower. Actual rent received or receivable. All those stuffs, let it be there. Property was let out for 11 months. Our 2 months is what for unrealized rent. All the rule 4 condition has been satisfied. So, in effectively, we have received rent only for how much months? 9 months. GAV, sir, details and all they have given. Sir, alternatively, as per income tax return, unrealized rent can be deducted from GAV. In such a case, GAV would be 1,32,000, being higher of expected rent of 1,17,000 or actual rent of 1,32,000. This alternatively, no need of it, sir, because we are settled with the 100% of the provisions. Am I right? If I explain this alternatively, your IFH will be alternatively. No need of it, man. Unnecessary confusions. Coming to question number 6, Mr. X, a residential house property question. The last question from our discussion slot. Sir, Mr. X owns a residential house in Mumbai. The house is having 2 identical units. Same question. First unit of the house is self-occupied by X and another use is rented for 8,000 per month. Same question have we done? Please go back. A rented unit was vacant for 2 months during the year. Particulars of the house for the previous year 25-26 are as follows. Standard rent 1,62,000, municipal valuation 1,90,000, fair rent 1,85,000, municipal tax paid 5% of the municipal valuation, light and water charges put it on dustbin, interest on borrowed capital put it on pocket, 1,500. I think we have done one question which is 2,000 rupees per month, I think. In the question, look at the data, interest on borrowed capital 2,000 per month. In the earlier question we have done. Sir. This is 1,500, so there is a change in data. Lease money, put it on dustbin. Insurance charges, put it on dustbin. Repair, put it on dustbin. Compute income from house property of Krishna for assessment year 26-27. If he shifted out of the default tax regime is the question. That means he's going to travel through the... It's a very straightforward, normal question. No confusions are there. Sir, computation of income from house property from let out portion and self-occupied portion. Right, sir? Can we do the let out portion, sir? Sir, actually, you have to prepare a master table. You have to classify it into two. Correct? Identical units. Tell me, 1,62,000 half. So when I write 81,000, it is applicable for both SOAP and LOAP. Am I right? 1,90,000 half. 95,000. 1,85,000 half. 92,500. Empty 5%. So 1,90,000 into 5%. 9,500 divided by 2. Okay, this all I am writing for LOAP. Okay, right? Sir, IOBC 1,500 into 12. 18,000 divided by 2. 9,000. Am I right, sir? Okay, man, that's it, man. Sir, for a self-occupied property anyway, sir, IOBC, this 9,000 can we claim it as a reduction? Am I right, sir? So for the self-occupied property, 9,000 rupees loss. For a let-out property, man, fair rent or municipal value, whichever is higher. 95,000 or standard rent, whichever is lower. 81,000 or actual rent received or receivable is here. 8,000 into 12, 96,000. Whichever is higher. 96,000. But it was vacant for 2 months. Correct? Sir, you can't take 8,000 into 12, sir. You can take only 8,000 into 10. Comes to 80,000. What was the expected rent? 81,000. So the actual rent received is less than the expected rent. You have to check the genuinity of the vacancy. Vacancy is pakka genuine. That means actual rent received will be the GAV, which is 80,000. You can claim less LT bar MT of 4,750. Am I right? So you will be getting NAV of 75,250. Am I right, sir? Less deduction under section 24, 30% of net annual value, which is 75,250 into 30% comes to 22,575. Am I right, sir? Come to IOBC, man. Sir, IOBC we already calculated. 9,000 rupees is the share of IOBC for the let-out property. Am I right? That means, my dear lovable students, taxable income from let-out portion is 43675. This is for let-out portion and this is for self-occupied portion. IFHV will be 34,675. Am I right? Self-occupied portion, nothing is there. Only IOBC is 9,000 rupees. That too, it is a what? Loss. Hello. A rented unit, sir, that expected rent 50%. The same computation once again done. This table only, man. This nearby table only once again done. Like, sir, municipal valuation, fair rent, standard rent, ellame half. Then you will be getting the expected rent as 81,000. But the actual rent received or receivable is 80,000. So actual rent received or receivable is less than the expected rent. But because of the, sir, if you see the actual rent receivable, you will be getting 96,000. Because 80,000 is for 10 months. 8,000 plus 8,000, 16,000 is for 2 months. 80,000 plus 16,000, 96,000, which is more than the expected rent. So we can say that vacancy is genuine. Since vacancy is genuine, GAV will be 80,000 actual rent received. Right? Are you all really with me? With this, we can say that we are through with the chapter income from house property. Before I wind up, I just want to talk for 5 more minutes and let me complete the introduction part. Nothing is there, man. Very simple part only. This one line we have to talk. For example, my dear lovable students, you are having a house property. That house property, sir, you are getting rental income. that rental income you are getting from farm house, forming part of agriculture income. For example, I'm having a farm house. Generally, that farm house will be given for rent to a farmer. Am I right? For example, if I'm a farmer, if I'm having a farm house, from that farm house, if I'm getting any rental income, what government is saying that generally farmer will be getting the agriculture income exempt from tax. That is, it is exempted under section 10(1) because that rental income will be received by farmer. So any rental income received by farmer from a farm house will be exempted under section 10(1). Under section, next one. Sir, annual value of any property of occupation of ex-ruler, for example, old kings and all will be there. Sir, they are staying in, sir, big Aranmani. Sir, the annual value of that Aranmani will be nil. That is, it is exempted. Annual value of any place. Annual value of any place in the occupation of ex-ruler. Wherever they are staying, from there if you got any income also, it is fully exempted. 1019A. For example, ex-ruler stayed some Aranmani. Now that Aranmani has been let out, has been, sir, given for rent. That is fully exempted. Sir, income from house property of local authority. For example, Chennai Corporation is there. Greater Chennai Corporation is there. If they are having any property and if they let out the property, from that local authority getting any rent, it is exempted. Common person having house property, renting the property, taxable. Alright, sir? This local authority. Sir, whose local authority? Government. Brother of the central government. Am I right? That means central government is saying that my brother, state government, sir, his son, local authority, is having any income from house property, fully exempted. Sir, approved scientific research association like Covishield, Covaxin, sir, that and all, finding out. Approved scientific research association. If they are having any income from house property, it is fully exempted under section 1021. Any house property income to university, not all university, approved education institutions, if they are having any income from house property, it is fully exempted under section 1023C. Under section 1023C. Sir, I am a registered trade union. I am standing for the benefit of the employees. Then, if that trade union is having any income from house property, that is fully exempted under section 1024. Sir, I am a political party. Right, sir? For example, I am political party TVK, BJP, sir, DMK, ADMK, Congress, and these people are having income from house property. And these people are having income from, that is fully exempted under 13A. That means if you are having or if you are getting house property income from these 7 places, fully exempted. Beautiful, eh? Number 1, sir, if you are a farmer, if you are having any agriculture income from the farm house, exempted. By letting out farm house, if you are getting any rental income, exempted. Sir, by letting out the Aramani, exempted. Sir, I am, sir, brother, local authority, letting out of property, exempted. Sir, if you are an approved scientific association, if you are having any IFHP income, exempted. Approved university, college, education institution, etc., which are covered at 1023C, exempted. Are you all with me? Sir, I am a registered trade union, exempted. Sir, income of political party, exempted. Are you all with me? In order to tax an income under the head house property, following 4 conditions should be satisfied. Number 1, assessee should be the owner of the property. You should be the, for adithavam property, income will not be taxable in your hands. Hello, sir? So you should be the what of the property? Property should not be used for assessee's business or profession. That means Casa Grande will sell the property. That income will not be taxable under IFHP. Only the property should be let out. Are you all really with me? Property should consist of any land, sir, or building and upper tenant thereto. In the sense means it should be land and building. If you are having only a land and if you are letting out the land, from that if you are getting rent, will be taxable under IFOS. Land should be there, building should be there. Are you all really with me? Then only it will be income from house property. So only land, IFOS. Land and building, IFHP. Only building, not possible. Building. Are you all really with me? There is no such concept. Hey, only building possible, no, sir. So only land, IFOS, land and building, IFHP. Sir, property held as stock in trade during the pendency of the sale property. For example, I'm Casa Grande, I completed a construction. I'm thinking that now the market is not good. So I'm waiting for market to pick up or market to boom. Till that 1 or 2 years time it will take. So during that intermittent period, I'm letting out the property. Even though the property are stock in trade, in between the time, if you let out the property, the income will be taxed under income from house property. So in order to tax an income, 4 conditions should be satisfied. Number 1, assessee should be the owner of the property. Property should not be used for the purpose of assessee's business or profession. Property should consist of any building or land appertaining thereto. Property held as stock in trade and during pendency of the sale. Property let out means still that income will be taxable under the head IFHP, right, sir? Sir, what are the exemptions which are covered under income from house property? 10.1, 10.19A, 10.20, 10.21, 10.23C, 10.24 and 13A. Second time, 10.1, 10.19A, 10.20, 10.21, 10.23C, 10.24 and 13. Last time to last time, 10.1, 10.19A, 10.20, 10.21, 10.23C, 10.24 and sir, that's it with regard to the second head of income, that is income from